So now you're on the Angel One web application and you're able to spot the Bank Nifty chart, and what you can see here, you're able to spot a strong resistance level, right? And what you can see here, you're able to see a strong breakout above this resistance level. So what are you going to do when you see a breakout? Obviously you're going to enter into a call side, right? So you're going to take a trade towards call side. So let's plan a trade here, right? So what are you going to do? You're going to enter somewhere around here, and your potential stop loss would be around 150 points, and you will aim for 1:2 risk to reward ratio, which would be around 300 points, right? So this would be your target. So this is your common trade setup when you see a breakout, right? You will obviously enter at the breakout and you will be aiming for 1:2 risk to reward ratio minimum. So as you can see, the market started going in your direction, but after a few candles you can see the market started going against your direction, right? And as a result you can see you got stopped out, right? So let us see another example. So as you can see here, you can see a clear breakdown near the important support level, right? So what are you going to do when you see a breakdown? So obviously you're going to short at that particular situation, right? So let's plan the trade here. So when you see a breakdown, you're obviously going to enter here, and your potential stop loss would be here, and you will aim for 1:2 risk to reward ratio. You're aiming for at least 220 points. So this would be a 1:2 risk to reward ratio, right? But what happened here? After you entered, the market went in your direction, but again it took a support and the market started going against your direction, and as a result you can see you were again stopped out, right? So one of the common doubt that majority of the traders keep getting is, how do we identify that this is an pullback or a reversal? So in this video you're going to learn two simple steps which will help you identify that whether the market is taking a reversal or is it just a pullback. So how do we identify whether it's a pullback or a reversal? So the first thing you need to do is watch out for the candlesticks. So when you enter into a trade and the market start going against your direction, then you need to watch out for the candlesticks. So you need to check whether it is a Lilliput candle or a strong directional candle. So let's say this was the resistance level and you plan to enter here. So you enter here and this is your potential stop loss and this is your target, right? So the market started going in your direction and you saw a red candle. Again you saw a red candle, but you don't have to worry much because these all are Lilliput candles. So as you can see, these candles are Lilliput candles, and if the markets are making Lilliput candles, you can say it is consolidating, right? So these are Lilliput candles, and you can see again these all are Lilliput candles. So if you are confused what are Lilliput candle and what are strong directional candle, don't worry, I am going to make a detailed video on it. So these are Lilliput candles, and what are strong directional candles? So as you can see, these are strong directional candles, right? So let's say after consolidation you entered here at this level and the market was going in your direction, but all of a sudden what you can see a strong directional candle. So these are no Lilliput candle, these are strong directional candle. And again the next follow-up candle you can see it was also a huge directional candle, right? So if you had entered here, obviously you would have been stopped out by this candle. So once you take a trade and after some time you see a formation of Lilliput candle, then the possibilities of that being a pullback is higher. But if you start seeing a strong directional candle, then the possibilities of that being a reversals are higher. So once you are on a trade, the best way to manage the trade is watching out for the candlesticks. So if you are able to spot a strong directional candle, then there are high chances of reversal. But if you are able to spot Lilliput candles, then you can hold it until it hits your target and you don't have to worry regarding reversals. And the next simple way to identify a reversal is using Fibonacci. So let's say you took a trade on the call side and the market starts making a bearish candle, then what you have to do, you have to mark the high low using Fibonacci tool. And if the market is not holding or taking support at 0.50 level or 0.618 level, then the chances of it being reversal are higher. And at last I would like to add one more thing, that is trend is your friend. So plan most of your trade on the trending side of the market, not against the trending market.